oh, glove is dead.
Yeah.
On what basis is dead? Is it in the share price dead? The industry is dead? What is dead? I do not know.
Share price, definitely.
Okay, so if you're talking about share price, sentiment is against it.
Yes.
RSS, if you look at the short selling, every month, you know, who is the top. And then, you know, certain houses issue certain reports. And then at the same time, they facilitate the short.
Yeah.
So you look at it, you know what is going on behind the dynamics.
Yes.
But do you know why they're going it? Because glove stocks generally, majority of the holders are retail investors.
Yes.
They are exactly playing to your sentiment.
Yes, yes.
If you are a kind of investor that is holding a long term like a big fund, do you think they can shake you? They can't shake you. There's no way they can shake you. Look at what happened to GameStop. What happened to AMC? They shake the funds. It's the other way around. But why we cannot do it? Because our mindset is not matured.
Correct.
Mindset is, I'm not saying the people in GameStop or AMC are mature. I'm saying that our mindset is not mature to become a long-term investor. We do not see value and we just think that, oh, sentiment-based, I should follow the flow. Then when the time is good, then suddenly you become a long-term investor and vice versa. But it's all down to personal choice.
Yeah.
So in your show, you have always advocated long-term. How many people actually will become long-term? We do not know, right?
Correct.
So we can only do our part.
You know why I'm laughing, Han? Because we had another guest, and this is the first time I hear lah. But when he said that, it resonated. He said retail investors, right? Some of them, I'm not saying all. He said they justify their position using TA, but then when it tanks, they justify holding on because of FA.
Suddenly they read security analysis.
So it's like the other way. I'm like, shouldn't you buy a stock because of FA and position yourself because of TA? You see? Which is the other way around, you see?
Precisely.
Yeah.
So what the point that you made is very true.
Yeah.
But that also comes down to lack of experience or the necessary knowledge. So, and also maybe not in the market long enough. So when you're in the market, you went through certain cycles, you've seen the best, you've seen the worst, then I don't think there are a lot of things that can panic you, you know, unless it's a outright, say a fraud, you know, or whatever it may be, you know. But for otherwise, for better or worse, that's why I always tell people that if you are really into the market and you're doing it for your children, you know, or for the next generation, try to build a long-term portfolio and all-weather balanced portfolio. Don't segregate or skew yourself to one position too much. You know, for example, those who are stuck in gloves, they are wondering, how do I get out of this rut? Right? Now, if you are having a balanced portfolio, for example, you can sell good companies that are already delivering the kind of returns that you want.
Correct.
And with the funds, you can average when it drops, when the share price drops a lot.
Correct.
To a level that you feel it's reasonable. Slowly, you bring down your costs. In fact, because the share price has dropped so much and it drops to a level that it doesn't make sense anymore, it makes you even more... it's like a godsend opportunity for you to lower your cost. The problem is that if it's not high or not low, you cannot maneuver. You know? That is the part where it's very difficult. Now, coming back to tech stocks, I remember 2 months ago, right? I was on your show, or almost one month plus ago, I was on your show.
I think it was in October. So
and I mentioned that make enough from tech stocks, get out, right? So shortly thereafter, the tech stocks started to plunge. And some of them never returned. I remember even the hottest stock of the day, Gentech went up to 50 and then now it dropped to 38. You know, but I still know that a lot of people didn't get out at 50.
Oh yeah, no, they were hoping for 60, ma.
and then now that it dropped to 30 plus, then they are saying that, hey, I'm a long-term investor. I'm a fundamental investor. But which part about Gentech is fundamental? Nothing. Why I say nothing is because there are no fundamental matrix that can calculate this kind of valuation at all. At all. So even sometimes I read the analyst report, I would snigger at it. Not because I think it's outrageous, but the way they try to justify it from a fundamental standpoint, make it too, what's the word? The right word is too, they try too hard. Because they have to, right? As at least you have to justify it. You cannot just say that, oh, I think that...
They need their report to have traffic, you know?
So they justify it from fundamental. So it gives a kind of a misperception to people that, actually investing in stocks like this is fundamental. It's not. If you invest in growth stock, invest in tech stocks, you believe in the growth, the numbers don't make sense, but you must know why you're getting into it and you must be prepared for the
long haul and the
risk,
the risk of them executing what they have said or promised or whatsoever.
Because with